Hello and welcome. In this video, we will learn about market capitalization and its importance. Alright. First, we will learn how to calculate market capitalization, and at the end, I will tell you the importance of it. Okay? Now, market capitalization refers to how much a company is worth as determined by the stock market. Alright. So, this market capitalization can be expressed in terms of a formula, or in other words, it can be calculated using a formula, and that formula would be this. Okay. Outstanding shares multiplied by current market price. When you multiply these two, you would get the market capitalization of the company. Now, what is this outstanding shares? Outstanding shares are the total shares a company has issued that are currently held by all the investors. Okay, these are the total shares that a company has issued that are currently held by all investors. And by all investors, I mean insiders, promoters, government, public, and others. Okay, this is different from authorized shares. What is authorized shares? Authorized shares is the maximum number of shares that a company can issue. Okay, this is different from that. This is also different from public float, which we will learn in the next video. Okay, outstanding shares are the total shares a company has issued that are currently held by all investors. Alright. Next, current market price. What is this? This is the price at which a share of the company is being traded in the stock market. Currently, what is the cost of one share of a company? That is the current market price. Okay. So, when we multiply these two, we get the market capitalization of a company. Alright. Let me take an example. Let us say that there is a company by the name ABC. Company ABC has a total of 10,000 shares. Okay. Let us say it has 10,000 outstanding shares. And let us say that the current market price of ABC, meaning share of ABC or stock of ABC, is 100 rupees. Meaning, if you want to buy one share of this company, then you will have to pay 100 rupees. That is the current market price. Okay. So, this multiplied by this will give you this value. And this is the market capitalization of ABC. Okay. In other words, in one more simple way, if I want to buy ABC company, then how much money do I need? That is the market capitalization. Okay. So, I am an individual. If I want to buy ABC, then I need this much money. Alright, this is one more way to think of it. Okay. Now, depending on this value, depending on market capitalization, companies are categorized under three headings. One is large cap companies, The companies whose market capitalization is more than 20,000 crore rupees. Next is mid-cap companies. The companies whose market capitalization is between 5,000 crores to 20,000 crores. And then the last one is small cap companies. The companies whose market capitalization is less than 5,000 crore rupees. Okay. So the companies are categorized under these three headings. Alright. Now let me go to my desktop and show you a few things regarding market capitalization. Okay. Alright. If you go to Google and search for large cap companies in India, then you will get a result like this. Now these are some of the companies that fall under the category of large cap. Okay. If you want a list with more companies in it, then you can click on any of the websites that list over here. For example, I will click on this website which gives me the list of all the companies that fall under the category of large cap. Okay, and you can see the condition that is listed here. Okay, do not worry about this. Okay, do not worry about this. In the same way, if you go to Google and search for mid-cap companies in India, then you will be presented with websites like this. You can click on it and go through the website to see which companies fall under the category of mid-cap stocks. Same way for small cap companies. Okay. Now, coming back to large cap, here I can see TCS, Tata Consultancy Services, as one of the large cap companies. I will now calculate the market capitalization of TCS. Okay. As an example, I will calculate the market capitalization of TCS and show you. Now, if you go to Google and if you search for TCS outstanding shares, then you will get a number. So here is the number. There are these many shares of TCS in the market. Some of the shares may be with promoters, some may be with public, some may be with government, some may be with insiders, and so on. But totally, there are these many shares of TCS. Okay. So this is total outstanding shares. I will copy this and I will paste it in the calculator. Okay. Calculator. Next, in Google, I will search for TCS share price. And you can see 3070 rupees is the current market price of TCS. Meaning, if I want to buy one share of TCS, then I will have to pay this amount. Okay, this amount. So it is 3070 rupees. So back to the calculator, I will hit the multiply button and type 3070 and then I will click on equal to symbol. And when I do that, I will be presented by this number. This is the market capitalization of TCS. Okay. Now, coming back to Google. If in Google I type TCS market cap, I will be presented by this value, 11.13 trillion rupees. Okay. How much is 1 trillion? 1 trillion is equal to 1 lakh crore rupees. Okay. So the market capitalization of TCS is 11.13 lakh crore rupees, which is the value that we got in the calculator. Alright. So there is a slight variation here. Do not worry about it because the current market price keeps on changing. Okay. But this is the market capitalization of TCS. And this is greater than 20,000 crore rupees, and so TCS is listed under the heading of large cap companies. Alright. Now, since the current market price of a share keeps on changing every single second, every single day, it is difficult to classify the companies under the heading of large cap, small cap, and mid cap by values. Okay? Meaning, according to the definition, if a company has more than 20,000 crore rupees market capitalization, it is large cap. Correct? But then, some of the mid cap companies have market capitalization more than 20,000 crore rupees. This is because market capitalization is a product of outstanding shares and market price, right? But the market price keeps on changing, right? And so there will be a confusion, correct? So to overcome this confusion, what SEBI has done is, it has said that the top 100 companies according to the market capitalization fall under the category of large cap companies. And from 101 to 250, whatever companies come according to their market capitalization, they are mid cap companies. And after 251, whatever companies are there, they fall under the category of small cap companies. Okay. So this is what SEBI has said. So if you go to Google and search top companies by market cap in India, you will get a lot of results like this. Okay. I will click on the second website, which will take me to this page. Okay. So here you will see that the companies are listed in decreasing order of market capitalization. Okay. So the highest market capitalization is of Reliance Industries. So this is in trillions. Okay. Trillions. Next highest market capitalization is of HDFC Bank, and so on. Okay. So what SEBI has said is, when sorted according to market capitalization, the first 100, rank 1 till rank 100, okay, rank 100 are large cap companies. Okay. So till here, these are large cap. Now this list can change. Why does it change? The market price of the stock can change, correct? So this list can change. But this is the general rule. Top 100 companies according to market capitalization are large cap. And then I will click on next 100. from 101 till 250. So let me scroll down. It is till 200. I will click on next 100 and till 250. These are mid cap companies. Okay, these are mid cap companies. Now after 250, meaning from 251 till the end, whatever companies are listed are small cap companies. Okay, so this is what SEBI has said to avoid confusion. All right. Yes, I hope the concept is clear. Now, there is also one more misconception, that the share price or market price of a share of a company tells you its market capitalization. Meaning, higher the market price of a company, higher is the market capitalization. This is a misconception. Okay, to clear this, I will take an example. So here I have the information of Dixon Technologies. The market capitalization of Dixon Technologies is 942.74 billion rupees, and the current market price or the share price is 15,650 rupees. Meaning, if you want to buy one share of Dixon Technologies, you will have to pay this amount. Okay. Next, I have the information of ICICI Bank here. The market capitalization of ICICI Bank is 9.72 trillion rupees. But the current market price or the share price is 1364.3 rupees, 1364.3 rupees. So when you compare it with Dixon, you can see that the market capitalization of ICICI Bank is more, but the share price of Dixon is more. Okay. So there is no general correlation between a high share price and a high market cap. A company's share price is simply its market capitalization divided by the number of outstanding shares. All right. A company can choose to have a high price by issuing fewer shares, or a low price by issuing billions of shares. So the price of a single share by itself tells you almost nothing about the company's total value. All right. Now, let me continue with the topic. These are the features of investing in large cap, mid cap and small cap companies. Investing in large cap companies is safer, less riskier than mid cap and small cap companies. This is because the companies that fall under the category of large cap are already well established. They have a good reputation, and that is why investing in them would be less risky. Okay. The price of these companies is less volatile too. And since they are at the peak of their growth, their return is also less. Return means return on investment. Meaning, if we invest in large cap companies, then the return that we get will be less. Return is less because the companies have less potential for growth. And so, if someone wants stable returns and if they want to take less risk, then large cap companies is the right choice for them. Okay. Now, there is an advantage here. The advantage is that the companies have high liquidity, meaning it will be easy for you to find buyers and sellers at every price. Okay, that is what is meant by liquidity. So, liquidity will be good in case of large cap stocks. Now, coming to mid cap. Mid cap companies are also good, but they are less riskier than large cap companies. The stocks are slightly volatile when compared to large cap companies. This is because they have a potential for growth. Okay. Mid cap companies are riskier than large cap because they have potential for growth, and so the returns would also be good when compared with large cap companies. So if someone is willing to take risk for good returns, then they can go for mid cap companies. Okay. Next, when we come to liquidity, mid cap companies are liquid, but not as liquid as the large cap companies. Okay. The last one is small cap companies, which are riskier. Now, these are highly volatile too, and so they are extremely risky for short term investments. They are almost universally recommended only for investors with a very long term investment horizon, for example 10 plus years. This long time frame is intended to allow the investors to ride out the high volatility and give the small companies time to grow. Alright, their price varies highly, meaning they are highly volatile, and they are not very liquid, meaning you will not be able to find buyers and sellers for every price. And since they have just started or only a few years old, they have a lot of potential to grow. And since they have a lot of potential to grow, the returns that we get on investment are extremely good when compared with large cap and mid cap companies. Okay, so if someone is willing to take a lot of risk for a lot of returns, then they can go for small cap companies. Okay, next, these are the features of the three categories of market capitalization. All right. What is the importance of market capitalization? Market capitalization tells us how big a company is. Okay. We can use this metric to compare two companies. If there is a company A and there is a company B with different market capitalizations, then we can tell just by looking at market capitalization which is the bigger company. Okay. This helps the investors to predict the future performance of stocks because it tells us how much money the public is willing to pay for the stocks or shares. Alright. So, with the knowledge of market capitalization of different companies, investors will be able to make better decisions about the types of stocks or shares they would want in their portfolio. Okay? Over a long period of time, large cap, mid cap, and as well as small cap stocks have the potential to lead the market, mainly because they are differently affected by the changes in the economy. Okay, so this is the reason why investors prefer to have a diverse portfolio consisting of a well balanced mix of large cap company stocks, mid cap company stocks, and small cap company stocks. All right.